Welcome to the Real Estate Investor Podcast. I'm your host, Gary Lipsky of Break of Day Capital. I talk to leading experts to discuss a wide range of subjects to educate investors on best-in-class practices to build legacy wealth and positively impact communities. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Investor Podcast. I'm your host, Gary Lipsky with Break of Day Capital. Today on the podcast, we have an old friend, Dallon Schultz. Dallon was on the podcast 4.5 years ago, episode 68, when he was an aspiring operator. Fast forward, Dallon is now a seasoned fund manager and co-founder of Capitallyst Pro, an automated CRM solution designed to help real estate investors raise capital more efficiently and effectively. Most investors rely on gut feelings, shiny brochures, or hype, and that's exactly how people miss red flags and lose money. At Break of Day Capital, we do things differently. We help investors make smarter decisions before the deal ever hits your inbox. From our educational webinars to our Invest Smart book to real tools like our portfolio tracker, we're here to give you the edge most investors don't even know they need. If you've been valuing our podcast and want to take the next step, subscribe to our newsletter. You'll get early access to webinars, new investor tools, and market insights sent straight to your inbox. Break of Day Capital, because smart investing starts before the deal.
Financial advisor Bromley Palamountain of Northwestern Mutual empowers people to make their financial dreams a reality through purpose, clarity, and design. Be sure to check out his links in the show notes. Thanks for joining us, Dallon. Can you start by telling the listeners a little bit more about yourself and what you do?
Yeah. First of all, I can't believe it was that long ago that we're on the show. That's awesome. And episode 68, I might have to go back and just listen to it and wonder what the heck I was saying, but appreciate you having me. So yeah, a little bit about my background. So I started in the medical field, and that was what I wanted to do with my life. I had a passion for service and making an impact and helping people. And I was always drawn to the medical field because most of the people there don't choose to be there. And so I thought it would be a great place to make an impact. I don't like school, so I decided not to go down the doctor route. And I wanted to specialize in the nursing field. So I got my bachelor's in nursing. I was going to become a nurse anesthetist. Those are people that just give you the drugs, anesthesia when you go under for surgeries, make a few $100,000 a year and take care of my family, and then probably get into some real estate investing because my grandfather did that a little bit. My father was doing it. So that was always something I want to get into, but it was always down the road. It's like, I'll get into it when. And a few months into that career, I was working in the emergency room at the time, but I was playing a pickup soccer game with some buddies at the local college there, and I broke my shin. I broke my tibia, and that put me out of work for a couple months. And at the time, my wife and I, we had 2 kids. We have 4 of them now. I remember laying there in the hospital bed just wondering how I was going to take care of my family. And that is, I mean, you're a father, Gary. I mean, you can relate. Like, that's no position any father, any husband, any man wants to be in. And it was in that moment that I realized that this path or this vision going down the medical field route wasn't in line with the future that I wanted. And so that's really what opened up my mind and jump started the pivot into real estate. And that was back in that accident happened in 2017. We got our first deal in 2018.
Nice. And then ultimately you kind of you were more focused on being an operator then, and then you kind of pivoted to capital raising and then starting Capitallyst Pro. So what made you want to start Capitallyst Pro? And you could kind of talk about what it is exactly.
Yeah, it's interesting when you look back on, and I'm sure anyone listening, anyone that's dove into real estate, you look back and you realize how certain things happen the way that they did to get you to where you are today. So I had no intentions of exclusively raising capital, let alone even starting a software company. Like, that thought was never even in my mind. I wanted to own the real estate. I'm a very practical person. I like real estate. You can see it, you can touch it. I grew up in a home where my grandfather owned about 300 units of apartments and my father managed it. So I grew up in that space. That was my comfort zone. So my vision was always owning, managing, taking care of the deals myself. And once I started going down that path and learning about funds and syndications, we realized that, well, one, we're competing on a lot of these deals with some of these other operators that were way more experienced than us. And two, I'm not a management type of person or mindset. And I know now that you don't have to be, as long as you have somebody on your team that can do that. And that's one thing, Gary, that you're phenomenal at, is the asset management and the being very detail oriented. And so a couple things happened. We did acquire some of our own deals. We acquired some land. We developed it. We developed a self-storage. There's a lot of hands-on operations that we did. And after a couple of years of that, I'm like, this is exhausting. And I'm tired of losing out on some of these deals with other people like you, like others that had more experience. And I realized, like, it just clicked. I was like, they all need money. If we could figure out the capital raising game and do what we do, which is connecting with people and building trust, we can get into more deals. And then rather than competing with these people, we can collaborate with them. And that, again, is just more in line with me, my personality. I grew up playing team sports. And so you literally have to do everything as a team to win. And in this world of real estate and investing, it's no different. So I had to go through that for a few years to realize what really energized me. And that was connecting with the right people and sharing with them and letting them know that there is a better way. There's a better option, maybe a different option. Some would argue that it's better, especially after these last few years in multifamily real estate, but there's a different option. Stuff that we weren't taught in school, stuff that we weren't taught as kids. So that's when we made a pivot. This was 2021. We decided to go all in on capital raising. And so we decided to launch a fund that enabled us to actually invest into other operators' deals. And we launched that. We raised a few $1 million. We've gone into 5 assets within that fund. And so our investors are now diversified across not just one deal, but multiple deals with multiple operators. And when we launched that, once we got head down and trying to focus exclusively on that, we realized our systems were complete trash. We had multiple softwares. We were trying to have them communicate together, and it was completely disorganized, and it was a cluster, and we knew there was going to be no way to scale. So in an effort to figure out a solution for ourselves, we developed one using a powerful engine that a lot of people are familiar with, but we got in there and we tweaked and customized it to our needs as capital raisers. And the whole purpose of it, at the core of it, when we look back at everything we've been creating over the last few years, it's about building trust. When we work with real estate investors, minimum investments are typically $50,000 to $100,000. And I don't know how many people know this, but 80% of Americans, 80% make $100,000 or less per year. So when you go in and say, hey, our minimum investment is $100,000, that's a big ask for some people. And so what we realized, what it really comes down to, it's not so much about raising capital. It's about attracting the right people and building trust enough to a point where someone is comfortable writing you a check for that $50,000 to $100,000. And that takes time. And trying to scale that on your own and manually is a complete nightmare. And so we went head down and just had this desire and passion to develop and design a solution to not just help us, but help other people in the industry. And that's really where Capitallyst Pro was born from, was from our own challenges. And over the last years, probably about 6 to 12 months ago, the fund is performing. We're still paying out distributions to our investors. And the need of connecting with more operators in our space and helping them put their systems together was becoming more and more apparent. And so it was about 9 months, 6 to 9 months ago, we went all in. And so we're 110% in on Capitallyst Pro and just really helping other people like us get their systems in place so that they can ultimately raise more capital.
Yeah, I remember you had pitched the idea to me a while back, and Jacqueline's our operations person. I'm like, Jacqueline, I have no idea. In the beginning, when we just started out, I was using um, um, I forget the just monkey, or I
MailChimp.
forget yeah, Mailchimp, and then we were using Active Campaign and pulling my hair out with all the different, like, it would work sometimes and this and that, and then Jacqueline took it over, and we started having all these different, like, programs that we'd attach to, and then she checked out your Capitalist Pro and was like, oh man, we could save money, two, we can get rid of all these extra programs, so really has really helped us. So I definitely recommend it. But that aside, what are some of the, like, three common mistakes you see capital raisers make?
That's a good one. And to be honest, it probably changes based on what we see in that short period of time. Now we're in a unique position where 99% of our users are capital raisers. And we've got a few people that aren't, that stumbled upon what we do. But as far as the three biggest mistakes that capital raisers make, I would say number one is they're not tracking engagement. And what I mean by that is in our system, once you get it set up, it's tracking and assigning a point value to the actions that people are doing within the account. So if they're opening an email, you're assigning a few points. If they're reading it or replying to an email or clicking on a link, you assign points. If they register for a workshop or a webinar, you assign points. If they schedule a call, you assign points. And so what that does is it quantifies their actions and their engagement. So you no longer have to think or wonder how engaged a person is because the system is recording it. So that's one of those things that once we got that put into place, we didn't realize how much that impacted literally the rest of the funnel. Because from that engagement scoring, now you can move people through the pipeline. You can move people through different stages based on their engagement level. So number one, I'd say, is definitely tracking the engagement scoring. Number two, and this is speaking from personal experience, people aren't getting themselves out there enough. For years, I avoided social media other than some posts about family and things that I was up to. And a lot of it, I think, had to do just with my own mindset around social media. You always see a lot of people just tooting their own horn and look what I've done. And again, that was my view and perspective of it. And through time and hearing how other people view it and realizing that it doesn't have to be about you, and it shouldn't be about you. It's about introducing new ideas, new concepts, lessons, experiences, things that you've gone through that could ideally help somebody else that's where you were 6 months ago, 12 months ago. And so again, for me, that was a process that I just mentally had to work through because I didn't ever want to be, and I don't care to be, like that super social media influencer celebrity, right? That's not who I am. But I came to realize that there are things that I've gone through, both good and bad, that I know could inspire, motivate, and encourage other people to also take action. And so when it comes to capital raising, for example, most of us that are in this space didn't start here. We had an experience. We went through something that got us to where we are. And there's other people going through very similar things that maybe we did a while ago. So my perspective now on social media is getting your story, your message out there. And you don't have to be in the spotlight, but be the spotlight. Like, highlight those ideas, the relationships, the things that could help other people along their path of life and their financial future and journey, whatever it might be. So I'd say that's number two. It's just not getting out on social media and getting myself out there to build awareness much sooner. And I can't help but to look back and say, like, well, if I had started this 3, 4 years ago, where would I be now? So engagement scoring, social media to build awareness. And then the last one, a lot of people have probably heard of this before. I don't think it's a new concept for most people, but the fortune is in the follow-up. And where I think the third piece where a lot of people struggle, it's not, they might think it's generating leads. And I think in some situations that's the case. But what we have found as we work with people in the space, we realize that their follow-up is typically consisting of maybe one text or one email saying, hey, where do we go from here? We had a good chat. And that's about it, other than maybe a monthly newsletter and things like that. So that's the third mistake we see a lot of people making, is not dialing in their follow-up. And part of that is because if that's left to you manually, to have to remember to call, to text, to email, that is a lot to do, and it compounds very, very quickly. So not having a system to help remind you and automate aspects of that, I think, is where a lot of people are dropping the ball. And again, it's when we talk about automation, you know this, you and your team are on Capitallyst Pro. It's not to completely replace you. At the end of the day, we're connecting with people that are going to write $100,000 check or more. So there has to be a human connection. That we're not replacing that. You can't get rid of it. But are there aspects of that process that we can automate? And that's really what we look carefully at. And those are the things that we integrate and build out into the system and automation.
I love it. I think I've probably been guilty of all three of those mistakes myself.
We've all been there. We've all been there.
Absolutely. I do see some people winning at capital raising that, haven't done it the right way. And then by that, I'm saying, they've overpromised, underdelivered. They haven't done their due diligence on an operator. Now, if you're strictly like a middleman, but like you said, when you're raising capital and it could, whether, I don't care if you're rich and you're only investing $100,000, someone worked hard for that money. And for listeners out there, if you're investing with someone, really be careful on who you're investing with and how they're doing their own due diligence. And I know that your fund has some really strict criteria, which is nice. How do you see capital raising evolving over the next few years, maybe with AI or with even Capitallyst Pro?
I would say in general, people, I think trust is going to be harder to build with people. And I mentioned this earlier on. If there's one thing that any investor needs, one thing before they commit any capital with an operator, it's trust. Now, there's different ways to accelerate that. There's different ways to accomplish it. But in this era of AI, and there's videos now of people just recording themselves like this, you and I, and then the AI will take it, replicate the voice, the speech pattern, the visual image, everything. And so it's going to get to a point where we won't know, is this podcast actually happening, or is this a transcript or a script we threw into the AI generator to make it look like Gary and I had this interaction? So I think when it comes to raising capital and things evolving over time, I said this maybe about 18 months, 24 months ago too. I believe real deals, real connections, real opportunities are going to start happening because of the rooms you're in. Because when you're in a room, when you're with that person, when you're connecting and shaking their hand, that's where true connection is made. With that being said, I also believe that if people aren't utilizing AI, if they're not using tech to at least build awareness before they get in that room, they're going to be so far behind, it's going to be hard for them to catch up. So with that being said, I think trust is going to take longer and be a little bit more difficult to get it to a point where people are comfortable writing those checks. But because of that, if you're not integrating some of these tools into your business already, you're going to find it being more and more, finding yourself falling more and more behind. That and I think referrals and those personal connections again are going to be the key for those people that are really raising capital, because people are already worn out and tired online. Everything is speaking to them, trying to sell them something, and it's interesting because at the end of the day, whether we realize it or not, subconsciously we want to be sold on different things, and we all have different needs. But when there's so much of it coming into your world in such a short period, it's hard to sift through all that. So I think true connection is really what's going to lead people to successfully raising capital. But I can't help but to think of how much more effective that true connection, or how much quicker it would happen if there was at least 6 months of awareness of that person, even if it was an AI video. Okay, even if it was, let's just play with this for a minute. Okay, let's say this podcast we're doing right now was completely AI generated. It's still my story. It's still my experience. It's still my voice. It's still my face. So that doesn't change as long as the person you meet in person matches what you're seeing online. I think that's going to be the key. If you're connecting with somebody and they're completely portraying to be someone they're not online, and then you meet them in person and it's completely different, that trust is going to tank. So I don't know if that answers your question. Just some thoughts around it. So.
No, I mean, I totally agree. I totally agree. And you hit upon one thing, referrals, which has been our number one way to raise new capital. People ask me like, what works for you? I'm like, well, it's all these different things that stack up. There's not one thing that is the clear winner. Obviously, consistency is huge, but referrals is the number one way. You keep doing good deals and making your investors happy, they will bring other people in. That's the best way.
And that happens through the power of association. Like, it's one of the biggest check writers we got for our fund that we met, and 2 weeks later he wrote the check. And not only was it the biggest check, it was the quickest check that we got, but it's because we found out that there was a mutual connection and friend that had already invested into multiple deals of ours. So once he realized, oh, that person's working with you and I know him super well. All right, well, I know he wouldn't work with you unless there's a certain level of trust or your integrity or your character. And so those associations and getting in that proximity of those people, I think is huge.
Dallon, have you ever had like a course or a book or a speaker, someone that really influenced you on capital raising, or was it like a bunch of different things? Or
I don't know that there was a specific book. There's one that gave me some clarity early on what I enjoyed doing. And I think just with time and little things compounding, it helped me fall into that role and into that space, because I gained clarity on what actually energized me. And that was actually Joe Fairless's book. What was it? This is one of the first books I read. It was the best ever syndication book, I think is what it was called.
Super thick book.
And super thick. It's like, I like use it as a resource. It was full of so much information. So I read it early on in my investing days, but he talked in there about having a thought leadership platform. And so we were talking about building awareness, getting on social media. So his was a podcast. That's how he got to really build up his name. His brand was through podcasting. He had a stage. And I remember reading through that. And at the same time, there weren't a lot of meetups here in Arizona, where I'm based out of, focused on apartment investing. And I was like, you know what, why don't I start there, right? The thought of doing a podcast overwhelmed me, but for some reason doing live events didn't. I don't know. It didn't make any sense, but I leaned into that, and we ended up growing one of the, or if not the largest, apartment investing meetup monthly gathering in the state of Arizona. And we had you come speak at it. And we grew that over about a year and a half, 2 years. And through that process, I really found out and enjoyed that. I really enjoy speaking. I enjoy speaking. I enjoy getting on stages. I like sharing my stories, my experiences. And when I do that, I'm able to connect with people in a different way where I can have more meaningful conversations with them just about what I went through, my experiences, get to understand where they're going through. And I think just as a natural result of that, we're able to build trust and lean into helping them in a different aspect of their life. In our case, it was diversifying their investments into real estate. So, I mean, I don't think there was a specific book as it relates to capital raising. I think it was one of those things that just with time, like most of us don't know what energizes us. We don't know what we want to do. And it's through that trial and error and experiences that you just kind of find your groove. And so it's taken us 5-6 years to get to where we are. And to be honest, I enjoy serving our users more than I do raising capital, because at the core, I am a systems and processes type of person. And I think I just had to develop that throughout my life because of my ADHD. It was hard for me to get anything done unless there was some sort of system or process behind it. And so being able to create and exercise my mind in creating these flows and seeing how everything is connected. And if somebody does this, then this happens, and be able to take a complex machine and system and put it in a simple way where pretty much anyone can plug and play and implement it to help them accelerate their business and capital raising. That's what really energizes me. But again, had you asked me 6 years ago if this is what I would be doing, it wasn't even a thought in my mind.
Well, I really enjoyed listening to your journey, Dallon, and seeing the great things that you're doing at Capitallyst Pro, teaching our listeners on capital raising. Where can the listeners find out more about you?
Yeah, we post quite a bit of content on YouTube and on LinkedIn. Those will probably be the two main platforms to look for us on. And we're actually going through some really exciting changes. So for the last 18 to 24 months, we were often just viewed as another CRM that was geared towards capital raisers. But through some of the growth and the relationships and what we've really been developing over the last 12 to 18 months, Capitallyst Pro is no longer just a CRM. It's going to be a complete solution for people for raising capital, from generating leads to building that trust on autopilot and to ultimately building that list of verified investors, your own list. I'm not talking about purchasing a list from someone of accredited investors. This whole machine that we're building is designed to qualify that list of your own investors so that when you do have a deal, you're not just taking a shotgun approach and blasting it out to your entire list. You're only sending it to people that have been through this process and are at a point where they're actually willing and ready to invest with you. So those are some exciting things that we have that we're working through right now. So we're going to be putting out even more content about different aspects of that. We refer to it as the capital flow funnel because we believe if and when it's set up properly, capital should feel like it's flowing freely, not feeling like a barrier or a dam to getting to that next deal or that next opportunity. But it all starts with trust. So so LinkedIn and YouTube are going to be the places to get more insights and thoughts into that. And then always happy to connect with people that are looking to really ramp up their capital raising game.
Sounds good, man. I look forward to you. Hopefully it's not another 4.5 years when I have you on again. We'll talk about the progress made next year or two.
Yeah, that'd be awesome. So really appreciate it, Gary.
Absolutely. This is Gary Lipsky signing off. I'll be back next week with another informative episode on the Real Estate Investor Podcast. To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and subscribe, and leave a review, as it will help us reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website at breakofdaycapital.com and sign up for our newsletter and fill out our investor application. We'll talk to you next week.